Hey guys, this is Rafi here from the Endgame Investor, and today I am having a discussion with Mario Monaco64. The first thing I want to ask is what is going on in Europe, meaning anecdotally, I'm hearing about electricity prices doubling, tripling, quadrupling, even quintupling. To put this in perspective, like I guess in Israel, my electricity bill is something like maybe $200 worth a month or something, maybe 250, 300 on a bad month. Even if theoretically it were to, like, let's say quintuple, and I'm paying $1,000 a month instead of 200, 250, that would hurt me. Yeah, but it wouldn't be catastrophic. I could handle it. I would just cut my expenses in other places. Are people really starting to lose it there? I have this theory that what is causing these incredible price spikes is not necessarily demand, but short squeezes due to the structure of how the electricity market works. From what I've seen in Austria, that they have all these short positions just for hedging purposes from power companies, and now they have to cover them because they can't put up the margin. Is that actually happening? And do you know anything about that?
Yeah, I heard about Austrian company having to ask for over €1 billion because they hedged, I guess, and then the prices went through their hedges and they couldn't cover the margins maybe. So because last year here in the UK we had about 31 energy companies that went bust because they didn't hedge, and there's a cap at the time, so they had to keep selling the gas and electricity, the energy, to consumers at the low price, while they had to go in the market above the price. So now it's gone the other way. They hedged, but then it went through. It's a mess. I would say that the more government tries to regulate businesses, the more problems they create. As for the affordability of prices going up, I think they're going to go up like 3 times here in the UK, or 300%. As of I think 1st of October it comes into effect. And yes, people, let's say you probably, let's say, wouldn't affect you or me, but for example, I saw a little video on social media, someone speaking about a teacher here in the UK. He was earning £33,000 a year. And after all his costs, taxes and everything, rent, he only had £170 left at the end of the month to buy extra stuff, no, let's say discretionary things. So can you imagine if the energy prices go up? Let's say, I think they're going up like over £2,000 a year now as of October. That's like about 170 a month. So a lot of people don't earn as much as 33,000. A lot of people are on very low incomes, like under 20,000. They won't be able to cope with it, and that's what the problem is.
What does that mean, not being able to cope with it? Do you expect people to, I don't know, hit the streets or go to homeless shelters? Like, and connected to that question, you know, since I've had the thought of the end game in my head, I've always thought, what would it be like if, when it really goes down and people are in the streets, am I just going to huddle down in my house and wait for it to be over, or hide in the attic, or some crazy thought? I have no idea what I'm supposed to do or what's going to happen. Now, for me, at least it seems to be just slightly more real now, because I'm seeing what's happening to electricity prices, and electricity is a very real thing. And in Europe, you know, it gets really damn cold. So
Yeah,
I'm starting to get worried for people, and people might actually start to freeze to death, especially in Germany. What country has it worse? I don't even imagine that the UK is even the worst one.
uh, I'm not really sure, but yeah, I think Europe is pretty bad, especially Germany. But how will they cope with it? I think they're going to try as hard as possible to cope with it. First, through borrowing. People are going to borrow more to pay for things, credit card, whatever, and overdrafts. I think I remember 10 years ago, actually, after the '08 crisis, when I started my business, pawnbroking business, and I used to take a bus home, and I used to meet this older lady, and she was she looked well-to-do, well-dressed and everything, and we were chatting, and this was in the winter, and she said, "Oh, I've spent the whole day afternoon at Waitrose, which is a upscale supermarket." And I said, "Well, how come?" And she said, "Oh, I was reading a book at their restaurant and cafe, and it's well heated. So I stayed there the whole afternoon. I didn't have to turn my heating on." So yeah, people have a lot of ways of coping, but like you said, um, how is it going to look in the outside world? Well, I think there might be a lot of protests, and we're already seeing also strikes, general strikes. I saw today that Lufthansa, I think they're going on strike, their pilots, or I'm not sure exactly which employees. So I think in the UK they've announced another rail strike sometime in the next few weeks. So and I think people will just go without as well. They will have to basically give up on a lot of things that they did for pleasure or entertainment. They're going to have to cut back on things that they don't really need.
Does Europe um, does Europe reuse or in some way get natural gas from its own sewer system or something like that? I mean, I'm asking these weird questions. I'm just trying to think of how it can be dealt with. I mean, Europe has gone through World War I and World War II, so they've been through worse, I'm sure of that. And you know, the grandparents' generation, they know what it's like to live in want and need. But I mean, I imagine there's a lot of production of natural gas just from waste that could be utilized, could be used. You know, these are just things I'm thinking of. I've never been directly involved in the world of finance. I've always been an analyzer from the outside, and you've been in the world, in that world of trading and seeing how it works and who it affects. So my two questions here. Assuming we're correct, and it's the hedging that is causing these short squeezes in the electricity market. What happens theoretically if the government stops bailing out its energy companies and just lets them go bust? There is somebody on the other side of this trade that's making a lot of money going long. They went long these contracts and they bought them from the shorters. So they're going to make a lot of profits. And what if the bankruptcies just happen, and then whoever was on the other side of the trade takes over the power company? Does the market balance itself in that way? Can the government just let it go, let the bankruptcies happen of all these energy companies, and then they're taken over by other entities? What happens then? How does the market reorganize itself in that way?
Well, last year, a lot of energy companies went bust, and the government didn't allow them to go bust. Bigger companies had to take their liabilities and their customers. There was one company this year called Bulb. They were bailed out by the government. I think it cost like a few £billion, so more taxpayer money. But what you said is what they should do. They should let things run its natural course. But then you probably get, then you wouldn't have a supply of energy, and that would, there would be blackouts, for indefinite blackouts. I would say would break the market. It's just all, I agree with you. They should just let the market do liquidate, but they never do. And that's the other thing, like you said, how are people going to cope? Or I think the politicians, they're going to try to help print or borrow more currency to give to the people. But I think that's going to be even worse. It's going to make the currency become worth even less. And energy providers, yeah, energy is going to cost even more.
Why would it lead to indefinite blackouts if you're just changing the ownership of the infrastructure of the energy companies doesn't actually go away? I'm trying to think of of, because this is going to happen anyway. There's going to be a default of everything all over the place when the currency dies. So that is the reset. If theoretically, for example, in 2008, the Bush administration just said, whatever, we'll just let all the banks go bankrupt, and then whoever takes them over takes them over. It's not like the infrastructure of the banks all just disappears. I mean, or if the energy companies go bankrupt, it's not like all their infrastructure of distributing energy throughout the country or throughout the neighborhood disappears. Somebody else takes them over. It'll take some time. Maybe there'll be some blackouts from the time the bankruptcy ensues to, the new staff has to be hired and everything's set up from the beginning.
That's what I meant. I mean, it would take a little while to reorganize everything. It won't happen overnight.
Yeah. So that's ultimately what's going to have to happen. I mean, we talk about a reset, but that is the actual mechanics of the reset. It's when the people that are in charge go bankrupt and they have to go home and do whatever they need to do. And then the people on the other side of the trade, there's always somebody on the other side of the trade. They make all the money and now they're in charge. And who are these people? Hopefully there are people, but
there are some big trading companies like based out of Switzerland, like Trafigura, and there's another one that used to be related to Mark Rich, but they've changed their name now. They're huge trading companies. I think those kinds of people are going to be on the other side.
Let's go back into a world theoretically where we are on sound money, right? I assume even in a sound money world, you would still need these power companies to hedge their production, and that theoretically still keeps them open to a short squeeze like we're seeing now. But how is this sort of market where you have paper derivative hedging, how does it function in a sound money environment where, what is the mechanism that keeps it from getting out of control, as opposed to now where you can have these crazy jumps in Germany from like 400 euros per megawatt to 1,000 in 2 days? How does that not happen in a sound money system?
Well, I don't know if you've heard of Professor Antal Fekete.
Yeah, I have heard of him, yeah.
He's spoken about how in a sound money system, the currency is stable, so prices are more stable. And I would say they probably wouldn't even need to hedge these energy companies. But in a fiat world where there's so many derivatives, and why do you need derivatives? Well, Professor Fekete's argument was that in order to keep the fiat Ponzi going, you need to have derivatives like on precious metals, on everything, in order to artificially manipulate everything to keep the currency looking good. So under a sound money system, yeah, if you had a breakout of a war, of course, it would disrupt everything, a major war. But when things are normal, I don't think that there would be as much trouble because everything would be more stable. And but there are accidents, but I would say that it wouldn't be as extreme under a fiat currency system. Under a sound money system, it would be more stable, and they wouldn't have as many. They might not even have to hedge. I mean, I think the foreign exchange market virtually didn't exist prior to 1973 when they allowed currencies to float against each other.
Right. There wouldn't need to be a foreign exchange market if, if you're on a gold standard and everyone's using gold and that is the money, what's the point of foreign exchange? So I guess the lesson is that under a sound money system, you would expect, or the market would expect, that the general price of commodities would stay more or less stable. Things would always fluctuate, but only relative to each other. You'd never have a situation where all commodities are going up all at the same time, or all of XYZ is going up all at the same time. The only cause for that has to be the inflation of the money supply.
That's right.
So then you're saying that there's no need for all these hedges, and anyone who's therefore is hedging is either wasting his money or playing some kind of speculative game that wouldn't be tolerated by its clients.
Yeah, I guess even under a sound money system, people like farmers, and they have to hedge because of the weather and like to lock in prices. And that I mean, derivatives was just an agricultural thing prior to the fiat currency system. You look at the Chicago Board of Trade and the Commodities Exchange, CME, they're all to do with cattle and wheat and things like that. You might need to hedge a little bit oil and energy, but it's more, I would say, the agriculturals.
Yeah, in a world, it's normal for companies or farmers or interests to hedge their production of whatever commodity it might be. But then again, when you go into a fiat currency system or a system where banks create the currency out of debt, whether it's through fractionals or whatever, then when party A and party B are directly exchanging a derivative, let's say a farmer is selling some kind of contract for his wheat or selling it short directly to another party who's speculating. So then there doesn't necessarily have to be a bank middleman for that, except when you're in a fiat system and the bank is controlling these transactions because it's enabling the leverage, so you don't have to put as much money to hedge as much production. Then all of a sudden the bank becomes the middleman to all these transactions, and then if the intermediaries fall down, then everyone who's depending on them falls down too. So you have this inherently unstable system that we're starting to see the cracks develop. We saw it in nickel, and now we're seeing it in electricity. And who knows what's next, but gold and silver are going to be last, and that's going to be the dollar itself, which means once, well,
Yeah.
and I'm not 100% sure if I'm right here, but when the so-called the paper markets and the physical markets reconcile, it's going to change the prices of everything.
Oh yeah, because derivatives create artificial, not just supply, but also demand, because people can just trade these things. I recently heard that the one of the Saudi Arabian officials said that the paper market in oil was disrupting the real market. He said there's too much too much paper being thrown around and not and it's like hiding the real fundamentals of the oil market. But yeah, it's like what you've spoken about. It's the backwardation. That's what's happening, and the more people want to get rid of currencies, fiat currencies, the more these kinds of things will happen.
Do you remember what the late 70s and early 80s were like? What was your perspective? You were,
I remember a little bit.
you know, you're like a teenager.
Yeah, I remember that there was inflation in Brazil, especially with the oil shock, for example, in Brazil. The Brazilian government they owned Petrobras, the Brazilian oil company at the time. Now they only own like 2/3 of it, but they went into producing alcohol from sugarcane, and all the cars, the engines were like changed, and it became really popular in Brazil to have cars with alcohol cars, and it was a lot cheaper. That was in the late 70s, early 80s. But one thing I remember, because you had inflation in the US as well, and I went to university in 82. I was about 17, 18. And people were still concerned about inflation. But then things just started changing. And you still had inflation, but it was going down, like the rate of inflation or disinflation. So yeah, I remember that. And in Brazil, it continued to be bad in the 80s. And yeah, I remember we had 2 or 3 new currencies from the 70s to the late 80s. And a lot of times they put 10,000, the new currency, and sometimes they put stamp on them because the 10,000 would become worthless. And I remember, though, if you had dollars in Brazil, you were okay. You were doing really well if you earned dollars. And at the moment, it's still like that. But like you said, gold and silver, when they go into backwardation and they go in obtainium, so to speak, then not even the dollar will be a good. So yeah, I do remember that, and I think a lot of people, probably more in the States and Europe in the early 80s, they still thought things were going to keep going up, but we're actually just at the turning point where we had disinflation. And I feel that I feel that right now, there's still a lot of people out there who think we're going to have deflation, that interest rates are going to go back to zero or negative. And I think those people are going to be wrong, just like the people in the early 80s who thought commodities are going to continue to go up were wrong. So that's how I remember it.
Especially in these times when gold and silver are really doing poorly. It feels like there's some kind of sinister force at work that's trying to force the market down, because they have this theory that if gold and silver get out of control, then the dollar is going to die, and we have to keep the dollar because we have to keep our power structure alive. I'm starting to think that maybe that's reading too much into what's going on, because at this point it's starting to look like, not starting to, it makes more sense to say, at least in my head, that the whole system is so interrelated, complex, and convoluted that there's no one party of interest that is trying to manipulate the metals down to achieve some kind of goal. It just seems like Adam Smith's invisible hand is pushing it down because, I don't know, somebody needs dollar liquidity, so they sell gold futures and they get dollar. It just seems to be the way to do it, that in a financial crisis, as much as we don't like to admit it, the gold and the silver bugs, the ones that are stacking coins and hiding them under their mattress, were a very, very tiny part of the actual gold market. The gold market is controlled by banks because they have the dollars and they're the funders of all the dollar needs of the world. So they're the ones that have to sell gold short when they need dollars, and that appears to be what's happening now. So it could be that gold and silver, at least the spot prices of it, are going to go very low, lower than we could imagine. I could be wrong on this, and if it happens, it happens. If it doesn't, it doesn't. But I think it's something that we have to emotionally be prepared for numbers that we couldn't, that never even came into any of our plans, just because of the flattening financial system that will force it. I don't think it's any specific party that is looking for a target. The question is, when does the other side overwhelm? And that could either be when the Fed releases pressure because they have no choice and they have to print a bunch of liquidity because banks need it, or I don't know. It could conceivably, the stackers could attack the market. I don't see that happening before the banks lose control.
Yeah, gold has, and silver, they have come down a lot, silver as well, in dollars. But if you look at the price in pounds, we're actually almost up 10% this year. So I think what's happening is all the fiat currencies are, going to going down very quickly. And right now the dollar is still, like you said, that's where the most liquidity are. A lot of central banks and governments borrow in dollars, so they need the dollars. The Fed they've got like a repo line for the foreign primary dealers, the European banks. So I'm sure they're borrowing a lot of dollars, and not even that is stopping the pound and the euro falling. So, for example, if the pound went 1-to-1 and gold stayed at 1,700, that would be 1,700 pound gold, and we started the year at 1,350. So yeah, gold could go further down, and it would be painful for people in the US and people who think in dollars. But I think it's actually protecting the people in other currencies. And eventually, when the Fed has to turn around and like save the system like they did in 2009 and 2020, then things will reverse very quickly. So yeah, that's how I see it. And the other thing I would note is, if you go back to Bretton Woods, the two currencies actually who were the top currencies, people usually just think about the dollar. It was the dollar and the pound, actually. Yeah, you could, I don't know until when it was, but people could hold pound reserves because the sterling was still a major currency, not as major as the US. So if you look back at crises in the past, like 1971, the UK devalued in 68 and the pound dropped a lot. We had a lot of inflation. And then the US defaulted or devalued in 71. And if you look at the '08 crisis, you look at the pound, it was at $2.10. And then in '07, '08, it collapsed to like 140 in the middle of the financial crisis. So what I think we're seeing now is the beginning of a major crisis because all these currencies are dropping, and like gold and silver dropped a lot from like just above 1,000 in March. I remember it well. March 2008 was the day that Bear Stearns had to be bailed out by JP Morgan and the New York Fed. Gold topped at 1,030, and then it dropped to like 680.
Yeah, October 31st it bottomed. I remember that.
Yeah, that was around the Lehman collapse. And then from there, it went almost in a straight line to 1900. So, and the premiums were huge at the time. I remember it really well, calling the bullion dealers and the coin dealers. You could barely get any gold or silver for the spot price. And I saw your latest report, the premium for some silver. I'm not sure if it's the Eagle or junk, is like 40% now. So I think that's what's going on. I think the system is so leveraged. There's so many derivatives, so much instruments like GLD, SLV, OTC gold, COMEX gold, that it's a mess. And if people need liquidity, they're going to sell whatever close out positions. And when they close out these paper positions, a lot of times the price goes down more than it should. So I think that's what we're seeing. Eventually, though, it will all come out in the wash, and gold and silver are going to be at the top in terms of value, I think, because we've had 40 years of all this massive infusion of easy credit and fiat currency, and everything is distorted. And I think that's what is all these shortages and these short squeezes is all related to that.
When do you think the European sovereign debt crisis starts flaring up again? Because we've seen it flare up twice randomly, not randomly, but like for seemingly, simple reasons or some meaningless trigger. And now you have these electricity squeezes and in real poverty starting to eke up. When does Greece like topple over again, or any of these weak pigs countries? When do you see that happening? Is that the trigger to the next collapse, or is it something in the middle? I mean, when does this flare up again?
Well, I think earlier this year, Italian yields were spiking higher, and then the ECB had to come out with this fragmentation deal where they take bonds that are maturing on their balance sheet, German bonds and others, and then they take the proceeds and buy the pigs paper. But we had data today out of Europe, economic data. Things still look great on paper, but with all the prices rising, energy costs going up, food costs going up, and it's not just going to be consumers, but companies and businesses are going to have to shut down or curtail their activities. They're going to have to let people go. So that could be the trigger. So we could be talking the next 6 to 12 months, we could see a sovereign debt crisis. And we're already seeing yields in Italy go back up. I think we went from 440 in the middle of June to around 3% until recently, and now we're back up to 4. Even the gilt UK yields are going up, and I think the new prime minister, be whoever it may be, they're going to come out with more tax cuts, more government spending, more fiscal largesse, and that's going to inflate the system even more. And I think it's going to finally start to spook bond investors.
It looks like it's all about to unravel. I just get that feeling. I don't know if I create that feeling in my own head or if it's a real feeling or what, but yeah, this is all a big mess, and it's going to unwind, and it's going to be scary and but also satisfying at the same time. It's quite a time to be alive. I don't know what else to say about that.
Yeah, I agree. it's going to be scary, but I think the other side is that these things happen very quickly, and I think we could recover very quickly. Just like Iceland, they let everything, all their banks collapse, and look how quickly they recovered. But we didn't do that, of course. But now it's going to be tough for them to keep the system going. They can hyperinflate it, or they can let it collapse in a deflationary collapse. I think they're going to choose the former, though.
Well, hyperinflation would just be a reset in gold and silver terms. That's all it is. It's the same. It's letting it happen because it's at the point where you try to not let it happen, it doesn't work anymore. So
Yeah,
nature just takes its course. That's all. All right. It was good speaking with you, and hope to do this again soon. And stay warm. I hope your electricity bills are nice and payable, but you seem prepared, and let us know how it turns out.
sure. And it was nice speaking with you as well. And I hopefully it doesn't get very cold in Israel either.
No,
Or
it's
not
okay
either.
here.
Yeah, that's good. I think we'll cope, but I think a lot of people won't. So there you go.
Well, good luck to them.